What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we edged a little bit higher with a very volatile day with the Dow Jones now coming into some very critical resistance. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today SPY was up 0.54% and we did get a daily close back over the 50 EMA, which is still very relatively flat. But we do have a positively sloping 20 simple moving average and we do have a bounce from that level. So right now I continue to tell you the bulls have everything to prove and the bulls are going to need to break above this resistance trend line, which is right here at SPY 386, and then defeat the bear, which is waiting right here at 390. It is not until SPY gets above 390 that this is going to start looking more bullish, so there is no reason to get overly bullish this close to resistance. The risk reward favors the bears right here at critical resistance, which means the bears are going to continue attacking. Remember, it's a bear market and the risk reward favors the trend, which is still lower as long as we're below this critical resistance. So if you're feeling bullish, you need to manage risk very tightly at this level at 378. And as you can tell, that is the exact level that we bounced off of intraday because we did test that level with a very volatile intraday bounce off of the lows. So you can see we did close with a relatively doji looking candle with wicks above and below. So the market is trying to digest where it wants to go from here. But I continue to warn you that the odds do favor the bears while we are below SPY 390. So if we see a rejection from any of this resistance above and a breakdown below 378, you are instantly getting a lot more bearish for at least a retest of the low at 371. But more than likely the rejection will be strong enough to send us all the way back down to about 358 and possibly even lower. So just be very cautious. It's going to be a very volatile next couple of weeks and we do have CPI data Thursday morning. So that is obviously going to be a catalyst for this next leg in the market. If SPY does start breaking above 390, we're instantly going to get a lot more bullish, but right now we need to respect the fact that we are at very critical resistance. On the NASDAQ 100 triple Qs, we're at 0.73% today, and as you could tell, the triple Qs also had a very volatile day and also closed with a doji looking candle, and we are still below the 20 simple moving average, which did act as resistance today. The trading range on the triple Qs is about 267 up to about 272, and the bulls need to prove it by breaking out of the resistance trend line above 276 and getting above this resistance zone around 282 to 284. You can clearly see this could be a potential double bottom, but we won't know until we break above the neckline. So do not just assume this is a double bottom until we get confirmation of the neckline breakout. This is very likely going to continue to be a downtrend until we get that breakout, which means this could be the next lower high before the next lower low. So watch that downside support zone right around 258 in the previous low at 260 if we start losing this support at 267. On the Dow Jones DIA ETF, we're up 1% today, and as you can tell, the Dow Jones is at extremely critical resistance. If I zoom out quickly and you just look at this resistance trend line, this is the resistance trend line that defines the bear market in the Dow Jones. And as you can tell, the daily candle is currently testing that resistance zone right around 333. We are above the 200 simple moving average, but it is still negatively sloping and we're very close to trying to fill the gap at 336, which is going to require the break above 333. If you are a bear, you do not want that gap to get filled. And if you are a bear, you do not want to see the bulls breaking above 333. And that is exactly why you saw the bears stepping in the Dow Jones right there at that level. The bulls will get victorious if they can decisively break and close above 333 and turn that level into support. But more than likely, we're going to see the bears raiding the Dow Jones as we drive prices back down towards the 200 simple moving average around 325. Remember, the bulls have everything to prove, so the bears have the full advantage until the bulls prove otherwise. So continue to expect lower prices from resistance until the bulls get the confirmation of the breakout. On the Russell 2000 IWM ETF, we were very flat on the day, also printing a very volatile doji looking candle. And as you can tell, we still do have the confirmed double bottom price target at 188 as long as we're above the neckline breakout at 176. If you want to stay bullish until we lose that support, that's completely fine and there's nothing wrong with doing that, but you do need to get extremely risk off if we lose this support zone around 178 and 176. Below 176, this looks like a false breakout without reaching the double bottom price target, which means we're very likely coming back down to retest the lows around 166 to 163. If the bulls can continue to push off the neckline breakout at 176, we have upside resistance at 183, 186, and the gap fill at 188. On the ARKK ETF, we were down 0.4% today, and we can see ARKK is still well within the bear market with the price action below all the moving averages, and we do have the full bear trend, and we're coming right back down to retest the lows around 33.7. Below this breakdown, we're going to look like a very volatile bear market, which means another leg lower, which is likely going to be down towards 30. But if the bulls can hold this support and get a bounce, we're going to need to see that break back over resistance at 36.5 and then coming back up and breaking out above the previous daily high right around 39 to 40. On the VIX, we're up 4.89% today, and we are seeing the VIX starting to bounce off of this support right here at 24, which is exactly where we're looking for the VIX to get a bounce, which even though it could be a short-term pullback, we are still looking for volatility coming into the market in the short term. The bulls will want to see the VIX turning around and crushing back down below 24, and that's very likely going to be confirmation of a bull breakout. But right now, the VIX is seeing a bounce from this support, and you do need to be cautious of a very volatile market while the VIX is this elevated, especially while it's above 24. On Bitcoin, we have trouble in paradise with Bitcoin having a very high volume selling day, going from the upper Bollinger Band all the way down below the lower Bollinger Band in just 4 short trading days on very high volume selling, going down 9.4%. And breaking down currently below that support zone at 19,000. You can see the next price target is down here at 17,200, and the low of the day currently was 17,500. So we are getting very close to that next downside price target. If things go from bad to worse and we lose that price target of support at 17,000, the next target is all the way down here at 12,000. So there is clearly trouble in the Bitcoin market, and you need to be risk off while Bitcoin is below this support at 19,000. Unless you're accumulating for the long term and don't mind buying lower. On Amazon stock, we were down 0.61% today, and we can see Amazon is still looking very weak below this resistance breakdown at 102, and we're sitting right on top of the price target yet again at 88. You can buy and accumulate at 88, but if we lose that level, we could be going lower, so you do need to set your risk right here at that price target, and if we do start to bounce in the short term, we're looking for a retest of that resistance at 102. If Amazon can break back over 102, then we'll be getting a lot more bullish for the gap fill just below 110. But do remember, this is a very strong downtrend, and we are starting to see volume picking up yet again. On Microsoft stock, we had a perfect doji candle today, going up 0.44% and getting rejected just below that resistance around 232. We found support right at the support around 225, so we are in a trading range between 225 and 232 until we get a breakout. The bull breakout above 232 will take us to resistance at 242, and the bear breakdown below 225 will very likely take us back down towards support at 219 and then 215. On Nvidia stock, we're up 2.1% today, and Nvidia is starting to push up towards that gap fill just below 150, but that is also going to be a very critical resistance. If we continue to push through the gap fill, the critical risk level of resistance is up there at 156, but do not overlook that 150 is going to be a very strong resistance. Downside support the bulls need to hold will be this neckline breakout at 145 and this 50 EMA and support zone right around 134 to 136. A break of all of this support will likely send us back down towards 122, but as you can tell, we are developing a bull trend in the short term as long as we hold above this support at 134. On Tesla stock, we were down 2.93% today, and Tesla did hit our price target, which was right there at 186.5, and we missed it by a gumball. If we break down below this price target, the next low would be right around 179.8, but I do expect this price target to be a very strong support in the short term because we are getting way too oversold, and we do have a gap to fill just above at 196.6. If we push through that gap, look for a retest of the breakdown just below 205, but overall we are still below the resistance trend line as long as we're trading below 216. So remember, this is still a downtrend. Even if we do get a bounce in the short term, we are looking for sellers to step in and continue to drive Tesla lower. On Apple stock, we were up 0.42% today as Apple did get a bounce off of that support around 136, but we are still getting rejected from a negatively sloping 5 EMA, and all of the moving averages are still stacked to a bear trend, which means we could still be heading lower with the most valid price target at that gap fill at 133 and then that support zone around 130. The bulls need to break all the way back above the gap fill and 20 simple moving average at 145 and get back above this resistance at 147. Otherwise, the downtrend is still very strong and very likely heading Apple lower. The financials were up 0.58% today as the financials are pushing up towards the 200 simple moving average of resistance just below 35, so look for the bears to start stepping in there soon. The industrials were up 0.87% today, continuing to push higher with the third day back over the 200 moving average and getting very close to the resistance trend line. The healthcare sector was up 0.5% today, back over all the moving averages yet again, but still below the resistance at 134 and slowly but surely developing a bull trend. The energy sector was up 0.1% today, breaking out to another closing 52-week high, so there is no surprise that the energy sector continues to look strong as long as we're above the breakout at 92 and above the support zone, which is the rising 20-day simple moving average at 87. So jumping back over to the S&P 500, without a doubt the bears are going to start stepping in because the great risk reward ratios for shorting the market are back, and the bears are right where they want the bulls, with FOMO and waiting for a possible rally that may never come. So try not to get FOMO and overly bullish when we are sitting right at critical resistance, because that is going to be a fatal mistake if we get the elevator down and you're caught holding the bag. I will remind you, if you're going long, you need to set your risk right there at SPY 378, and you need to instantly get risk off if we break below that level. And you can stay bullish while we're above that level because it is a valid support level. However, do remember you are still in a bear market, you are still in a downtrend, and the bears are not going to just roll over and give this market away to the bulls without a very strong fight, and the bears have plenty of energy to push lower from here. Also, don't forget I have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. You can learn more about Bank or learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.